Good afternoon, traders. This is Christian from Hertz Tribeca Trade Group, and it is Monday, April 6th. Oof, big rally day, big rally today, big participation as well. Market breadth very, very strong today. What do we have for the averages? SPY SPY up 6.6% today. Q's up 7.1% today. IWM up 7.6% today. You have to be kidding me with these numbers. And that's kind of what we were looking at all day today was, this was a little bit different than what we've seen in days past, not only by magnitude of the move today and the participation of the move today, but also just continuation, right? We've seen a lot of days where we start in one direction, sellers come in and push this market around. We really didn't see that much volatility throughout the day. It was pretty much basically just try to hang on, and ride the move for the day. And then, of course, things really escalated to the upside at the end of the day. I think really, not having the floor brokers around, is adding to that end of day volatility. They're not offsetting orders and so forth, and that's some of what the floor breakers do is kind of stabilize things a little bit. So we're seeing these big whippy moves at the end of the day. So looking at the overall performance just really quickly, and then we'll talk about the technicals. But the home builders, man, these things have been really volatile. They were up almost 14% for an ETF. I know some people, they don't like to trade ETFs because they don't think they're volatile enough. I mean, that's a ETF of home builders and home construction stocks up 14% in one day. Also, the retail, retail, a lot of names that were probably a little bit oversold, rallied pretty hard today. The semiconductors, good to see that strength as well as tech. So if you look through this group, again, I go back to participation and really strong market breadth that didn't fade throughout the session. So, I think that for one day's price action, I think you got everything you wanted if you're bullish, in terms of that breadth being very strong and a lot of different groups, participating. And consumer staples were the worst performing group, but they were still up 3.7%. So again, take this, the way that the market has been moving. I think just like when we say that we've been down, you kind of just take things one day at a time right now. The VIX closed at a 45, so it did finish down on the day, kind of picked up there a little bit into the close, but it's moving in the right direction, right? So it's important to analyze things and spend time doing research. But sometimes doing, over analyzing hurts a little bit too. I saw this weekend, like just a ton of people, talking about 2008, 2009. The issue. So number one, I think it's important to realize the lessons that you've learned. I traded through 2008, 2009 as an institutional trader, and I certainly learned some lessons. However, that doesn't, just because there's lessons to be taken away, it doesn't mean that this is 2008 or 2009 and it's going to act the same way. I remember back then people were looking for a footing too, and saying, okay, well, when was the last time the market sold off? And they were trying to look for signals. But each one of these bear markets or corrections, however you want to call it, they're all different, right? Some have similar characteristics to them, but each one of them is completely different, right? In 2008, 2009, we didn't have a virus that was, doing what it's doing and shutting down the country. So I really think that when you hear a lot of people compare certain characteristics to 2008 and 2009, you really have to take them with a grain of salt. That this is not going to play out the exact same way that did. It's not going to be the same duration. It's not going to be the exact same move from top to bottom, and so on and so forth. Again, you could look for clues based on that. That's something that I've talked about with the VIX. Getting back to around 40, 45. It doesn't necessarily mean we're out of the woods. But so in any event, this was a great day for the bulls, and if you were positioned along that way. But you basically, just for me, like just taking this one day at a time, and really, like, I was a big seller into this strength today, especially in my trading account. In my other accounts, not so much. I didn't really move too much around. But here's what I did in my trading account today, which again, I always show you by the blotter. But I went long Apple. One day last week. Some of these days they meshed together for me, but I was actually underwater in this trade. I think Apple closed at around 241 on Friday, so it was nice to get out of this. This continued to rally, throughout the day. Microsoft, I kept peeling out off of Microsoft, and my plan was to kind of leave some on, but the thing just skyrocketed at the end of the day. So I'm out of Microsoft for now. These were the January 2021 calls. And everything else that I basically did, the gap up days in general are not easy trading days typically, right? The majority of, when the market gaps up like this on the open, they're kind of difficult days, I think. And again, not everyone is exactly different, but for the most part, gap up days are difficult. So I did what I always do. I took targets in just about everything. And I basically set around 10 o'clock and I got to where I wanted to be. I took, these weren't all full exits. Like I said, Microsoft, I was peeling out over the day. But Apple was a full exit on the open. I just wanted to make sure that I was, taking advantage of what we got in the morning. And then once things settled down, I found ideas. Adobe looked pretty good to me. I was able to get out of that at 317 today at the end of the day. Maybe I should have actually held that a little bit longer. 319, I think, was my ultimate goal, and I just said, hey, that's good enough. Then the cyber names have been showing some strength. FTNT, it's really tough to chase, right, when stuff's up 4 or 5%. So when I do chase, it's a starter position. Netflix too, I'm looking for a run into earnings. Netflix, before I go over the S&P chart, we'll talk a little bit about Netflix. This thing is so close to breaking out. I figure I need to have a trade on. I can't watch this thing break out and me not have a position on it. So don't forget, we're just basically a couple weeks away from earnings season. So Netflix is going to report in a couple weeks. That's on 421, so just basically around the corner. So I'm thinking put on a trade for a possible run into into earnings, right? And that would be a full-on breakout if we can get above that 384. If you look at Netflix on the weekly chart, I've been looking at this 380 level for a while. So again, it's a weekly chart. This is just the first day of the week, but imagine that'd be really cool. I think if Netflix can break out, and really for me, like it's been one of those names where people are using Netflix more than they probably ever were before. So I don't know why it wouldn't break out at this point, other than they're probably not adding a whole bunch of new subscribers. It's probably existing users really using the product more and more. But in any event, I still think it's worth a shot, right? So that was just one trade, and again, just a starter position on in that one because I just can't chase the green strength like that. I also liked Palo Alto too. We saw a little bit of calls in Palo Alto. Remember the call activity that I see on the tape for me is just an idea. To basically get into something, but it's trying to break out of value. It's almost there. The 1 hour charts, as many of these charts look very attractive to me, and I think when I kind of slow things down and look at them on a 1 hour, like you could see that this thing has been in range basically for the last week and a half, and it's trying to lean to the upside here. So nice move by Palo Alto today, up by 5.3%. That was one of the groups that I emphasized in the weekend member video was basically medical devices, healthcare companies, relative strength, as well as cyber companies. I've seen like 3 or 4 different cyber companies that are all leaning to the upside. FTNT is another one where I put this one on Twitter, but and this is the one that I took today. I just think it's the nicest looking, and even so, again, getting into a starter position, because this thing is up so much, and if it backs into this, I think that would be a greater place to put on a bigger position. But I think you have to start it at some point. And again, I didn't want to start it here inside value. This is a better spot. And then, of course, leaving myself room to scale into the position. Going full all in into a position isn't for me. right now, and most and in most market conditions as well. All right, so let's bring up the index charts really quick. I've said for a while that, and I emphasized this in the weekend video, is that basically where SPY was, or S&P futures, going into the end of the week, was kind of a little bit in no man's land, right? We've got top of value on the daily, all the way up here at 27.31, and bottom of value over here. I see some people like drawing out like scenarios to the upside and scenarios to the downside. I don't know what these guys do this for. I don't know if it's so that they can say, this was the right one. Literally, what we take a different approach here, and we basically just say, hey, here's a level to trade from. When futures opened last night, and then we basically say, okay, well, we've got above value. Here's your support, right? If you wanted to take a long in S&P futures, here's where you would get out, right? And then we kind of look for the next level, right? And we saw this virgin point of control taken out. I did think that that was going to be basically. I honestly thought that that was going to be as far as we went for the day, and then it becomes the next thing, right? And the next thing was, if we can get through, where last week's high, which we did at the end of the day. So, all in all, very impressive price action. Next level up, and again, this is just the way to do it, and to manage your trade. And if it doesn't go your direction, then you take a stop. And right now, I would probably set a stop at last week's high, to try that. And next target would be, our next big area would be this 2769. In S&P futures, that's a 1 hour version point of control. And that's even further up than this, right? 2769. So next level of resistance is probably this 2731, right? But that's the name of the game. Mapping it out, and knowing where there's key levels to take some targets, and then of course setting your stop price, right? None of this BS about, I'm going to talk about each one of these levels all the way up here, and so on. I really don't get any value from somebody who does that, and then they say, okay, well, there's a good chance we're going to retest as well. So they're talking about two different things going on, and then they're going to tweet the one that whatever direction the market goes in. So I would rather take the approach that we set up a nice risk to reward setup about where this market could go, and be objective on a day-to-day basis. What else? The Qs. I think the Qs took out a 1 hour VPOC at the end of the day. Notice they've been acting better all along. They're pushing to the top of value. So a number of things could happen. So this was just taken out, right? So usually once we take out these version point of controls, unless there is huge volume, which we did see huge volume today, but normally that's a place to take targets. And that's what I did in my trading account. In some of the other places, right, in a tactical portfolio, right, that if we go to this one, right, this is more of a medium term, right? You could see I added to this last Wednesday, I added to this the previous Thursday, and I'll look to kind of continue to dollar cost average into this, because my thought is it's going to be a bumpy road, for the next couple weeks, next couple months. But I will continue to, again, I use scale in versus nibble, but I will continue to scale in, because all in all, as I discussed, I sent this out on Friday post close, and I basically got attacked for it, which is fine. I can take it. It's not a big deal for people to come at me on Twitter. I have no problem doing it, and that's why I put out the information. But so many people doubted what I was saying. I was talking about how the growth rate in total cases is decreasing. Now, I hope this is the start of this process, right? And I talked about this with several other countries, right? Following this line where, once the cases start, they grow, and then they start to taper off, and we see the growth rate. So everybody told me something different. Oh, you're not looking at this right. You should be looking at deaths. You should be looking at the denominator is wrong in this. Da 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 da. you should be looking more at it's because of the testing isn't appropriate over and over and over. I was told that I was wrong when I put this out on Friday, but you know what? You have to start someplace, and you have to start to see a break in the trend. And I think, as I mentioned on Friday, we're starting to see that. Again, we're not out of the woods. It's a beginning change in trend, and we hope it goes this direction. Just like when we go ahead and we look at this for Italy as well, right? Which was in a lot of trouble as well. And if you look at the cases as well, they've also been decreasing from where they were a couple weeks. So social distancing and so forth, I think this is as the experts say, right? The I'm listening to the experts, and I'm trying to take clues off of what they're talking about. But this is where we were in the beginning of March, right? And this was the and I went over all this, by the way, in the member video this weekend. But this is the first week, the second week, right? And you could see double digit increases. And then it took about 5, 6 weeks, to where it's really starting to come down in terms of new cases, right? And you could see this percentage change decrease. So we've seen this now in several countries where it takes, depending on how quick they were um, to to start social distancing and some other measures, that it's been taking 4 to 6 weeks. So ours started where we really started to, the U.S. This was around March 15th. So we've got a long way to go, right? But we're starting to head in the right direction, right? And I think that also translated to what we saw in the market today, among other factors. All right, guys. So that's it for today's video. Again, I think it's going to continue to be a bumpy road, and you kind of take what you can get, and you capitalize on the situation. And then if we happen to get some type of a couple days where the numbers get worse, maybe those will be some more buying opportunities for the long side. And on the short side, we'll have to see as that comes about if there's opportunities there as well. All right, guys. Have a great night. Really nice day, and altogether, a lot of the trade ideas that we put together this weekend worked very well. Did I get into every single one of them? No, but TMO is the best performer. That was something also that I kind of laid out this morning. Again, tough to chase these things. If we go into the market webs, that was one that I laid out this morning. Talking about, again, mapping out the trade and saying, hey, here's where I would look to take, targets in the trade. Where did this thing get to today? TMO. Yeah, it blew through there. So you could have taken your target here and then kept a runner on for here. But this I thought was setting up really well last week. It just wasn't ready to go. It needed some market momentum, which a couple days at the end of last week, we just didn't have that market momentum to kind of push this thing through. But you got it today. All right, guys, have a great night. See you tomorrow in the trading room.